Hello everyone, I welcome you all to D Street School. As everyone knows, Nifty is on bullish on long run. Every time it breaks its own all-time high. But the question is how Nifty is going to perform on coming week. It's going to be a bullish or bearish or sideways market. What kind of the option strategy we can opt for it? What is the volatility range of the Nifty? I'm going to answer for all this question. Before that, if you're just new to this channel, I would ask you to watch the entire video and leave your comment in the comment section. If you like this video, don't forget to click the like button and subscribe to my channel. My name is Shiva Gurunathan. I'm going to with you for next 10 to 15 minutes. Let's begin the session. Before we go and discuss anything in the detail, let me give you the overview about the video so that you can understand better. Initially, we will start with the technical analysis. When I say the technical analysis, I'm sure you'll be very familiar about the chart analysis. We'll go and find any clues in the candlestick chart, whether it's going to be bullish or bearish or sideways market, and with supported with the indicators and open interest and volume indicator, everything will go on to the analysis. Once we're done with the technical analysis, once we found the market direction, we will go and estimate the volatility range of the Nifty for next 5 days. When I say the volatility, here we will be discussing about the historical volatility. Let me tell you the what is meant with the volatility. We can go and calculate the trading range of the stock or index by using the historical volatility. So it's a statistical concept. So in case if you want to know more about the volatility, I made a separate video for it. So in order to know more about the historical volatility, how we can go and customize the stop loss by using the historical volatility. So I shared the link in the description. Don't forget to watch the video. I'm sure it will be very helpful for you. So once we done with the volatility analysis, we will go and discuss about the what kind of the option strategy we can opt for it and what are the thought process behind that particular option strategy. I will give you the basic outline about the strategy which I used in this video. After that, we will go and calculate the risk and reward analysis, which means we'll go and discuss everything at what strike price we can go and initiate our trade, what would be our profit and loss, everything we will be discussing here with including the payoff chart. So let's begin with technical analysis. What you see on the screen is Nifty daily chart. As I said before, you can see Nifty is in bullish on long run. So each candle represents a day every day. So if you see the previous trading day candle on Friday, it clearly shows there will be a strong resistance around 17,600 range. So it formed it like a spinning top. So what we can understand in some stage, this is the stage where sellers have more power than buyers. And you can also see I use the 3 moving average, like 50 days moving average, which is in pink color, 23 days moving average in the orange color, and 4 days moving average is in white color. So my perception about the Nifty on upcoming week would be we can expect correction. So once market breach this 17,500, we can expect market will come down till 17,300 or 17,250. So this is my market view. So I'm expecting Nifty will be come down for minimum 200 to 300 points on next week. RSA also clearly shows it almost in 80 level, so it's an overbought, so we can expect correction on Nifty. Based on the strategy, I have used the option strategy, put back spread ratio strategy. Before we go and discuss about this strategy, I'll go and explain about the volatility range of the Nifty so that we will have a clear-cut conclusion. Last close of the Nifty would be 17,585. So this is the 4 days of historical volatility of the Nifty. In percentage, it's in 2%, which means we can expect minimum 2% of movement of Nifty, either upside or downside. Here I have given the different levels of the volatility. So you can see R1, R2, S1, S2. This is not a typical support and resistance. In order to understand to the layman, I named it as the R1 and the R2, S1 and S2. Actually, this is a standard deviation concept. As I said before, this is a statistical concept. So R1 and S1, it represents the standard deviation 1. So which means 68% Nifty will trade between those ranges, like 17,362 to 18,072. 68% Nifty will trade within this range. So if you go on off for standard deviation 2, we can say 95% confident Nifty will trade from 17,018 to 18,437. So there will be a 95% of chances Nifty will not breach this level. So again, we cannot give any 100% conclusion. So again, we do have a very little chances, 5% that Nifty might trade uh, uh, above or below these ranges. So yeah, as I said before, in case if you want to know more about the volatility, as I said before, I made a separate video. Please go and watch that. So what is the support and resistance for the Nifty? So the support would be, we got a very two strong support. One which is in 17,400, another one is in 17,000. So 17,000 we have a very strong support when compared to 17,400. Like that, we got a three resistance levels. The first one, which we can locate it at 17,700. Second, which we can find it at 17,800. But compared to this resistance level, 18,000 is have more power. So whenever you get any sell signal on those levels, you can go and initiate the short trade. So this is a statistical analysis of the Nifty for upcoming week. So as I said before, let me go and explain about the strategy which I use here. So far we completed two part. First we found the direction of the market, then we estimated the trading range of the Nifty. So we got answer for two questions. Now finally we'll go and see the what kind of the option strategy we will be using in this video. So we are using the put ratio backspread strategy. So what is the put ratio backspread strategy? So what is the thought process behind that? So what would be the market view? The market should be moved either upside or downside. So we are expecting market will go down. So if market go down, so if its work favors us, you will be getting unlimited profit. So if market favors us, in case if markets goes against our prediction, so our profit will be limited. So we will not incur any loss. In normal trade, if the market goes against our direction, usually we will be incurring a loss. But by using this strategy, we will not incur any losses. We will book profit, but that would be a very limited profit. So you may have a question here, when we will have a losses. If in case Nifty didn't move as we expected, so if it trades in sideways, we will be booking loss. So when we use put ratio backspread, the market should be either move upside or downside. So this is a three-leg strategy. So we use long put to in out of the money, and one short put in the money. So let me go on explain. So at what strike price I made this strategy. So this is going to be a 23rd September expiry. As I said, historical volatility, we can expect 2%, and the last close of the Nifty would be 17,585. So this is a two-leg strategy, but the quantity would be three, because we will go and buy a two quantity of long put. So I'm sure you might have a basic knowledge about what is long, what is put, what is call. So we'll go on buy a two quantity of long put at the strike price of 17,600, which is at the money. So when we go on initiate a long put, usually we will pay the premium, we will pay the premium for that. So the premium would be 97 rupees 30 paise per quantity. So here we will be buying two quantity. So which means we will be paying 195.60 paise. So our target date days would be 4 days, and another leg would be a one short put. So when I say the short put, we will be receiving the premium. We will not we will not pay for premium. We will receive premium. So I use the strike price 17,800. It's in the money. So we will be receiving the premium of 226 rupees 70 paise. So the total net credit, when we go and implement this strategy, you will have a net credit. So if you use this strike price, if you use this strike levels, when after you initiate this strategy, you will have a net credit of 32 rupees 10 paise. So we found everything. So if market works favors, we will be booking unlimited profits. If market goes against our direction, we will be stopped with the limited profit. So only if market is sideways, only then we will incur losses. So what would be the break even point for both the sides? So if market goes below 17,432, we will be start booking profit. So this is the unlimited profit, because if we are expecting market will come down for a while. If in case if market goes high, if it breaches 17,767, we will also start booking the profit, but this time our profit will be very limited. So what is the maximum loss for this strategy? It would be 167 rupees or 0.90 paise on premium. So the total amount would be 8,395. This is the maximum loss we incur while we using this strategy. What is the minimum profit? That would be 32 rupees 10 paise, which is 1,605. So minimum profit, which means if market goes against our direction, which means if Nifty uh, moves forward, we will start our profit will be limited. So the maximum profit we can book, that would be a 32 rupees 10 paise. If market goes favors decision, we will be booking unlimited profit. So our target would be 17,300. So entry would be, this is wrong, entry would be 17,600. So this is song. Entry would be 17,600. Stop loss would be 17,800. And as we know, the units would be 50 units. So this is what all I want to communicate it with you. So what I said, let me give you the quick conclusion. I'm expecting Nifty will be come down for whiles, which means we can expect Nifty will have some corrections. So I'm expecting Nifty will come down till 17,300. And moreover, Nifty is on bullish on long run. So that's the reason I use this particular strategy. I hope you understand very well. So if you would have any doubts, don't hesitate. Please ping me comment section. And if you like this video, please go and click the like button and subscribe to this channel. And thank you for your time.